Tere kõigile! It's an absolute pleasure to be back to Estonia and be part of this amazing festival. As a Georgian, I'm particularly proud of what Estonia has accomplished thus far, putting a small country from this region on the global technology landscape. So as we say in Georgia, Gau Marjos, here is to your victory and many more successes. So today, I will talk about the road to NASDAQ New York. So why are we here talking about this? Who in this audience thinks that at whatever stage you are with your startup, this is the right time to be thinking about NASDAQ New York? Any thoughts? I see a couple brave souls there. Wow, very ambitious audience. Everyone wants to go to NASDAQ. Well, the objective of my speech today is to convince you that it's never too early to be thinking big. So, dream big. Building a great company from scratch is gonna take you at least 10 years. So if you are going to spend time, a lot of time, building something, let it be as ambitious as possible. So my first message to you is, dream big, and by working hard, you will make it real. I agree with Steve Jobs, where he said, people who are crazy enough to think they can change the world are the ones who do. So dreaming big is great, but it has to also be realistic. So what I'm going to show you here is to demonstrate that it's realistic for many founders around the world. It's happening, and it's happening at an increased speed. So it's realistic for you as well. So if we look at foreign technology IPOs in the US, it's on the rise. The first thing I wanna highlight here is that let's look at all foreign tech IPOs ex-China. I'm excluding China from given the size of the economy. Even in 2022, when the IPO market was shut down, 50%, close to 50% of all IPOs that happened in New York were foreign. It highlights the receptivity of foreign tech companies to New York, but it also highlights the resilience of the New York marketplace in general. Then let's look at the growth rate from 2018 to 2021. As you see here, the foreign tech IPOs are growing at much faster pace than the domestic or the US IPOs, growing at 70% compound annual growth rate over the years. The third thing is that if in 2018, majority of foreign tech IPOs were in the infrastructure software and maybe a little bit of internet and e-commerce, in 2021, the diversity has increased tremendously, which highlights just the receptivity of all the different verticals from all around the world to New York. Now let's look into who these companies are. $25 billion worth of cash have been raised by foreign tech IPOs, and again, this does not include China. Foreign tech IPOs in New York at the valuation of $260 billion. Imagine, $260 billion worth of currency were printed in New York by foreign tech companies, and you can be one of them. So we have had some success stories from CE as well, UiPath and GitLab. And if you look at the general industry or vertical breakdown, software is a majority of it given the scalability of the business, but we'll talk about this a little bit later. So Israel actually is a great case study, being a small country, but having a significant contribution to the IPOs in New York. Now, why do companies go public? Because it's all about the liquidity. Because cash is king. So if you are doing a pricing round in the private markets, the value creation is on the paper, but it's not liquid. So if you're looking for liquidity, if you're looking for actual value creation, then the IPOs are a good benchmark, especially in the efficient markets. Because in inefficient markets, the pricing, may happen the mispricing. Actually, one of my best friends who is from Estonia and who flew down from London to be here with us today, spends a lot of time looking for mispriced securities in certain markets in Europe. And he's doing it very successfully. First, because he's a very smart guy, but second, because the opportunities of mispricing happens more in certain markets than the others. So if you are looking for an efficient market, New York exchanges are a good benchmark. Why? Because New York is the capital of the capital markets. At whatever metrics you are gonna look at, total listed companies, total market cap, total IPOs, total capital raised, total tech IPOs or capital raised by tech companies, all of these are 4, 5, 8 times larger than London and many times more than Euronext and most other exchanges. So New York is the mecca of capital markets. Now, we all know that talent has no nationality. And talent is evenly distributed around the world. Well, maybe talent is a little bit more skewed towards Estonia, but capital is definitely skewed towards New York. So if we look at market capitalization, US has the largest market capitalization in the world and is home to the biggest companies in the world. Now, US investors do go out in different markets to look for innovation. And luckily, and thanks to all of you, the US investor interest has been growing tremendously and has been growing at an increased pace and the largest among all in Central and Eastern Europe. So if we look at the growth by the region, the US investor interest has been growing by, and actual investment have been growing by 145% annually over the last 5 years, the largest among all other regions. And when the big guys get interested in playing the game, the rounds are getting larger as well. So what's the objective of these US investors? Why are they invested in Central and Eastern Europe? Well, the objective and the hope and the expectation is that eventually the best of the bunch of these companies will monetize in efficient markets, hopefully in New York exchanges and the US marketplace. So what is the framework that founders can use to get to big places like NASDAQ New York? Compelling story and vision. Whether you are a private company or a public company, IPO is an ultimate exercise for positioning the company. And earlier you start thinking about the positioning and your story as the company, better it's gonna be for you and more successful you are gonna be. Technology. There is a rule of thumb in product or technology, it's 80-20 rule, meaning that 20% of the companies have truly unique characteristics, and 80% of them are doing what everyone else is doing. So you wanna make sure that you are in this 20%. Market opportunity. Is the market opportunity big enough that is worth spending a lot of your time? Can you grow, not in 2, 5, or 6 years, but can you go 10, 15, 50 years? Is the market big enough? Can you actually roll out new products, new categories, and keep growing? Team. As we saw in the prior slide, median age of IPOs are 12 years. So if you are starting a company, no one can predict how the world is gonna look like in 12 years. But the question you should ask yourself is, if everything goes right, is this the team who can pull it off? And never has it ever been a better time in our lifetime, for sure, to attract the best talent from all around the world, given the layoffs, what's happening in the tech space. And business model. There are two things I would like to highlight. First is, do you have a durable business model that can scale? And second, is the business predictable? Because Wall Street and investors like predictability. I actually took a NASDAQ listed company private, so public to private, the opposite, a couple of years ago, because the management was unable to provide guidance to Wall Street because their product was dependent on an introduction of new products by other companies. So they were not, they did not have a good handle, and they were not in charge of their own destiny in that sense. So Wall Street does not like unpredictability and uncertainty. So do you have a good handle of your own business, or whatever sector this may be? And last but not least, track record. Can you build something at a smaller scale in a different market and then create the repeatable processes so that you can do it in other places around the world? So my key message here is, go global or go home. What are some of the metrics that you can measure and illustrative benchmark just to align yourself to? Total addressable market. Are you going after a big market? Illustratively, I think $10 billion is a good benchmark in general to be on the lower side. Is market positioning global? Because the companies we looked at, 80% of them had global customers. Pre-IPO revenue growth, as you see here, 20-30%, that's probably on the lower end as well. Can you sustain growth over the last 10 years as such that you are growing at the time of the IPO another 20-30%? And if you actually see the long-term growth, 55% of the proceeds from IPOs are actually invested in R&D, and R&D is a long-term. So at the time of IPO, the companies are investing in 10, 15, 20 years growth because they are going after a big market and the opportunities are big. So predictability of the business, 90% of the companies that go public beat their management guidance. It just shows that they have a good handle of the business. And positive cash flow. There is a lot of focus these days that, the company should have positive cash flow. But only 30% of companies that went public actually had positive cash flow. What does it mean? It means that it's not about the actual result, but it's all about having a clear path to profitability and clear path to cash flow and getting investors comfortable around it. It has to be real and tangible that you can get there. And the global team, only 50% of all companies, foreign tech companies, had a global team. So it's not a necessity. The talent is everywhere. But generally, it's a great time now to pick up and have a global team. So what's the road to NASDAQ New York? If there is a road, there is a journey. So the first journey is the founder's journey. So at different stages of the startup life cycle, founders are focused on different deliverables, different metrics, users, getting the subscribers, working on LTV CAC or different metrics. That journey is different than the valuation journey. Because at whatever metrics may be available at different stages, or however investors may be valuing you, given what's available or what's measurable at different stages, the ultimate valuation driver is the cash flow. So better you know what are the valuation driver, better decisions you are gonna make that's gonna make you successful. And finally, on top of founder journey and the valuation journey, there is a capital journey. And there is a very clear path how you can start from the regional capital, go and attract global capital, and then eventually do an IPO at NASDAQ or New York, respectively. Now, here I brought a case study from Central Eastern Europe. I think everyone knows UiPath, a company that was founded in Romania, and they checked most of the boxes, raised initially capital from regional funds, then they moved on and raised capital from the US funds, and the valuations grew. They opened new offices globally, hired people from the US, etc. So it's a good case study, eventually ended up IPOing at a 30 billion market cap at New York Stock Exchange. I also have this picture here to highlight that ringing the bell is fun. Look how happy these people are. They're having the fun of the lifetime. I picked this picture for two reasons. Well, first, it's like happy faces, but we were co-manager of Robinhood's IPO at NASDAQ New York, and also the founder is from Bulgaria originally. So, ton of CE success stories all around the world. With this, I want to wrap it up and say that I know the journey is long. And it's different for everyone. What's the same for all is that all of us have had people in our life who have supported us on our journey. For me personally, I've had so many people in my life supporting me on my journey. And I'm so grateful for them for where I am today. I've come here all the way to pay it forward to the community that I care, and in the region that is close to my heart, because I want you to succeed on your journey. So I'm not saying goodbye, but see you later. I'll be around all day and hopefully meet as many of you as possible. Kaumar Jos!